Let's talk about a group of people who basically invented global business. The Phoenicians. And honestly, they're way more interesting than most history classes make them out to be. First things first, where were they? Picture a narrow strip of land along what's now Lebanon and parts of Syria. That's tiny, like embarrassingly small compared to the empires around them. Egypt was massive. Babylon was powerful. Assyria was dominating. And then there were the Phoenicians, basically squeezed between mountains and the Mediterranean Sea. But here's the thing, geography is destiny. Being stuck on a tiny coastal strip meant they couldn't expand inland. There wasn't enough farmland for agriculture or space for building huge territories. So what'd they do? They looked out at the water and said, all right, let's become seafarers. And they weren't just good at it, they became the absolute best maritime traders the ancient world had ever seen. The major Phoenician cities were Tyre, Sidon, and Byblos. Each was independent, which meant they competed with each other sometimes, but they also shared culture and religion. Think of them like rival companies in the same industry, competitive, but fundamentally connected. These weren't huge cities like modern ones, but they were incredibly wealthy and incredibly busy. Ships were constantly loading and unloading goods, merchants were making deals, and money was flowing everywhere. Here's what separated the Phoenicians from basically every other ancient civilization. They didn't want to conquer the world through military force. The Egyptians, military domination. The Assyrians, conquest and control. The Phoenicians, profit over plunder, that was their motto. Now, before the Phoenicians could become international bankers, they needed something to sell, and that's where their location actually helped. Their mountains had cedar trees. These weren't just any trees. The cedar of Lebanon was massive, incredibly durable, and had this beautiful yellowish wood. It was perfect for building temples, ships, and anything else that needed to last forever. King Solomon's temple in Jerusalem, built with Phoenician cedar. The pyramids of Egypt, they imported Phoenician cedar too. So, from the very beginning, these guys were processing and exporting resources. They understood supply chains before anyone had that term. But cedar was just the start. They also produced Tyrian purple dye. They made this color from tiny shellfish, and I mean tiny. Workers would catch these mollusks in traps, let them sit in the sun and basically decompose, and then extract this incredible purple dye. They had to process thousands of these shellfish to make a small amount of dye. The color was so vibrant and so rare that it became the ultimate luxury good. Royalty wore Tyrian purple. It basically became the ancient world's version of having a Rolex watch. Everyone knew it meant you had serious money. They also got into metalworking. They'd import copper from Cyprus, silver and iron from Spain, and gold from Ethiopia. Then their craftsmen would transform these raw materials into ornate vessels, jewelry, and art pieces. They bought cheap and sold expensive, basic economics, but executed perfectly. Around the 9th century BC, the Phoenicians started establishing colonies. Not colonies like empires usually did. They weren't trying to control territory militarily. They were setting up trading posts, basically permanent business hubs. Carthage became their most famous colony. It was founded on the coast of North Africa, right in a natural bay that was perfect for ships. It became so successful that it eventually rivaled the eastern cities. Then they had Gades in Spain, modern-day Cadiz, which was crucial for accessing Spanish silver and tin. They also established settlements in Cyprus, Sardinia, Sicily, Malta, and all over the Mediterranean coastline. Think about what they created. A network of ports that connected the entire known world. A merchant ship could leave from Tyre or Sidon, stop at Cyprus for a break, keep going west to Rhodes or Crete, then continue to Sicily, Sardinia, North Africa, or Spain. At every single port, the crew spoke the same language, the merchants understood the same weights and measures, and they worshiped the same gods. It was the first truly globalized economy. We call this kind of interconnected system just business as usual, but back then, it was revolutionary. And the coolest part? These colonies weren't built through violence or conquest. The Phoenicians chose locations carefully, natural harbors, freshwater sources, and access to resources. They essentially negotiated with local populations. It was a voluntary exchange, not forced subjugation. Some historians think that's why they survived so long, while other civilizations around them kept getting conquered and destroyed. Here's the genius move. The Phoenicians realized they didn't just have to trade their own products. They could buy goods from one place where they were cheap and sell them somewhere else where they were valuable. They became intermediaries, the middle people in international commerce. Let's say papyrus from Egypt wasn't worth much in Egypt, it was everywhere. But in Greece, people wanted papyrus badly. The Phoenicians would buy it cheap, ship it west, and sell it for triple the price. Same thing with textiles, spices, tin, and metals. They'd move things between civilizations that never directly traded with each other. You had Egypt over here, Mesopotamia over there, the Greek islands somewhere else, and Spain in the far distance. Nobody was connected but the Phoenicians? They connected everyone. This is actually why scholars call them the equivalent of international haulage trucks of their time. They were basically the logistics company for the ancient world. And like any good logistics company, they kept detailed records. They needed to track where goods came from, what they cost, where they were going, and what profit margins they'd make. This forced them to develop sophisticated bookkeeping systems. Accuracy mattered because money, real money, was on the line. For a long time, the Phoenicians didn't actually use coins for most of their trade. That sounds weird, but it made sense. Their business was so international that a coin minted in Tyre wouldn't necessarily be trusted in Spain or Egypt. Different kingdoms had different values and different trust levels. Instead, they used something more flexible: credit agreements and trade contracts. When a merchant wanted to buy something, they might negotiate on paper written agreements about what they'd pay, when they'd pay it, and how much of it. Sometimes goods were bartered directly. Sometimes states collected tribute and then redistributed it. The system was flexible and evolved constantly. But around the 8th century BC, everything started changing. The Phoenicians realized they needed something more efficient. That's when they started minting coins. Now, here's the key detail. They didn't just make coins randomly. They followed Babylonian weight standards. This was genius because it meant Phoenician coins were compatible with what already existed in the wider world. A Phoenician shekel, yes, that's where the word comes from, was made of silver and had a consistent weight. The purity was reliable, the weight was standardized. Coins from Tyre and Sidon became incredibly popular. Why? Because merchants trusted them. They knew exactly how much silver was in each coin. It was reliable, consistent, and valuable everywhere. By the time they're minting coins regularly, we're getting closer to something we'd recognize as banking. Now, transactions could happen faster. Now, value could be measured and agreed upon in minutes instead of days. Here's where it gets really important. The Phoenicians didn't just trade goods. They started lending money. And unlike a lot of other ancient societies, they actually charged interest on loans. This wasn't seen as evil or corrupt, it was just business. Think about why this matters. If you're a farmer and you need seed grain to plant your crops, but you don't have money, who do you turn to? In ancient times, you might go to a temple. But the Phoenicians, they started operating like actual banks. They'd give you a loan, you'd pay it back after harvest, and yes, you'd pay back a little extra the interest as a fee for borrowing. This practice came from Mesopotamia originally, filtering through Babylonian influence. But the Phoenicians developed it into something really sophisticated. They understood that lending money could generate profit. They understood risk. A farmer might have a bad harvest, so the interest rate had to be high enough to account for that possibility. They were calculating risk before anyone had a formula for it. By the 8th and 7th centuries BC, the Phoenicians introduced interest-based lending to the Western Mediterranean. They brought this concept to Greece and Italy. These weren't local practices. They were spreading this banking innovation everywhere they went. Merchants who worked with them learned it. People in colonies learned it. Slowly, other civilizations adopted it because it worked. Now, where did all this money and credit actually get stored and managed? Temples. This is important because it tells us something about how ancient banking actually worked. Phoenician city-states had temples dedicated to their gods, temples like the ones to Melkart, a deity who was basically the god of trade and commerce. These temples weren't just religious buildings. They had vaults, they had treasure rooms, they had secure spaces, and they had priests and officials who could keep records and manage transactions. Think about it from a practical perspective. You're a wealthy merchant, and you've made a huge profit from trading. You can't just leave it lying around in your home. Bandits, thieves, and enemies could rob you. So you take your silver, your coins, and your valuables, and you give them to the temple for safekeeping. The priests document it. They charge you a fee for storing it. Then, when you need that money later, you can withdraw it. But temples didn't just store money. They became active financial institutions. They accepted deposits. They gave out loans. They exchanged currency. They tracked everything in written records. This is literally what banks do today, except without the religious component. In Carthage, one of the most famous temple complexes became the financial hub of the Western Mediterranean. Money flowed in and out constantly, records were maintained carefully, loans were documented, interest was calculated and collected. It was sophisticated enough that historians sometimes argue about whether it was actually banking in the way we'd recognize it, but it sure looked like banking. Now, here's where the Phoenicians really showed how smart they were. They invented something called promissory notes and letters of credit. These are basically like ancient checks or credit cards. Imagine you're a merchant in Tyre and you've made a deal with someone in Spain. You don't want to physically transport barrels of silver coins on a ship that's risky. Pirates, storms, shipwrecks, too many things could go wrong. So instead, you write a document. This document essentially says, the bearer of this note can go to my business partner in Gades in Spain and receive this amount of silver. It's revolutionary because now money can move without physically moving. The merchant in Spain receives your letter, takes it to your contact, and gets paid. Money travels as information instead of as physical weight. This made commerce so much faster and safer. These weren't regulated by any government or central authority. They worked on trust and reputation. If you were known as an honest merchant, your letters of credit were accepted everywhere. If you had a reputation for being a cheat, nobody would honor your documents. Your name and your word were literally your currency. This is probably why reputation mattered so much in ancient merchant communities. What really made the Phoenicians the first international bankers wasn't just one innovation. It was the combination of everything working together. They had the network colonies across the Mediterranean. They had the ships to move goods and people. They had the standardized coins. They had the credit system. They had the temples as financial hubs. And they had trusted merchants scattered everywhere. When you had all of this working together, something magical happened. Commerce became efficient. A merchant in Egypt could partner with one in Spain without either one traveling. Money could move between cities in weeks instead of months. Credit agreements were honored because everyone was part of the same network and knew that reputation mattered. The Phoenicians basically created the first multinational economy. Different cities, different laws, different languages, even sometimes but connected through Phoenician merchants and Phoenician banking practices. Historians have described it as an early example of what they call a world economy. Not a world empire, but a connected economic system where goods, money, and credit flowed across borders. Here's the interesting historical fact. The Phoenicians didn't keep their system to themselves. As their colonies grew and their influence spread, other civilizations learned from them. The Greeks observed Phoenician trading practices and adopted similar strategies. When the Romans eventually conquered the Mediterranean, they took Phoenician methods and built on them. In fact, the word bank itself comes from the Phoenicians, sort of. Money changers and bankers in Rome would sit at a bench called a bancu, which came from the Latin word for bench, which itself had Phoenician roots. The Romans formalized banking more than the Phoenicians did. They made it official and legal. But the underlying concepts, they came from watching the Phoenicians work. By the time medieval Italian cities like Florence and Venice became banking centers, places like the Medici Bank emerging in the 1300s, they were building on foundations laid thousands of years earlier by the Phoenicians. They had formalized systems, yes. They had legal codes, yes. But the basic idea of international credit, of merchant networks, of lending with interest, these came from Phoenician innovation. The Phoenician system couldn't last forever. By the 7th century BC, their colonies were facing competition. The Greeks were becoming better traders. Then Rome got stronger and stronger. Alexander the Great literally destroyed Tyre in 332 BC, one of their greatest cities. Eventually, Carthage, their most successful colony, fought Rome multiple times and was destroyed in 146 BC. But here's the thing, they didn't disappear because their system was flawed. They disappeared because military empires eventually dominate. Rome had legions. Rome had military power. Rome absorbed the Mediterranean. The Phoenicians lost not because they were bad at banking or business, but because they weren't primarily a military power, and nobody was conquered by banking. Yet their legacy stayed. Their alphabet is the basis for most modern written languages. Their navigation techniques influenced everyone who came after. Their banking concepts evolved and developed. And most importantly, they proved something that's still true today. You don't need to conquer the world with armies to control it. You can do it with commerce, credit, and connections.